All right, so I'm pushing back on all comments here. Yes, having localized fee markets on an L2 is cool, but in my opinion, it's somewhat worthless because you can have application-specific rollups. You're not really fighting congestion on your rollup anyways. If you launch something really cool on Arbitrum, go spin it up into an L3.
What's up, everyone? Welcome back to another episode of 0x Research. Before we dive into today's episode, we want to give a quick word from our sponsor, Hexens, the most hardcore security team in Web3, pioneering in zk and novel cryptography. Hexens is trusted by tier 1 protocols like Polygon, including their work on their zkEVM, Mantle, RiskZero, Lido, 1inch, Nubank, and more. I hope some of you guys got to go stop by their booth at Permissionless. Really fun team. And got to learn more about what they do. We will mention Hexens and what they're all about a little bit more later in the episode. Today is September 18th, and we're changing it up a little bit today, actually, and doing an analyst-only episode recap of Permissionless 2. It was a lot of fun getting to meet a lot of you guys down there. It was honestly kind of surreal having people come up to us and saying, "Oh, I know you guys from 0x Research," so thanks for doing that for sure. And actually, we're going to be changing up the format of the podcast a little bit and doing analyst episodes separate from the actual interviews. So be sure to let us know what you think of that format in the comments. But anyways, Ren, maybe I can kick it over to you to kick us off on the Permissionless recap.
Yeah, sure. So for me, it was my first time in Austin, Texas. Definitely not used to the heat. But overall, I think Permissionless was a great conference. It's not the easiest environment to host a conference in. We're in the US, which doesn't have the most favorable regulatory environment. We're deep in the middle of a bear market. And, there's conferences all around the world, such as like ECC, Korea Blockchain Week, Token 2049, that crypto participants have to choose between. But all in all, I think Permissionless 2 was fantastic. You had a good mix of sort of very in the weeds researchers, protocol devs, institutional. We had a few senators or Congress people. I don't know the difference since I'm not American. And it was just a very high quality and high signal conference compared to whatever you experience in the bull market, right? In the bull market, it feels like you go to a side event, the room is packed with probably realistically 500 people. It feels like you're just trying to like shoot it off and say hi to everyone every 5 seconds and say, "Hey, I work at blah blah blah. What do you do?" And like, if you want to move on, you got to move on because there's so many people to talk to. But I felt like the conversations I had during Permissionless were a lot more slower pace and in a better sense, right? I really got to understand people, really got to understand why they're here, what they're working on, what they're interested in. And obviously, like, everyone that's still here at this stage of the market is deeply passionate about crypto. And that was the overall vibe I was getting. Everyone here is very passionate. They're very interested in whatever they're doing, even if that's running a fund, building a protocol, building a product or a service. Everyone is here for a reason, and they know why they're here, right? And tying this to one of the opening speeches that they had at Permissionless by Eric Voorhees, right? I think he made it very clear why he's in this industry. There was a quote from his speech where he said, "To such people, we owe nothing, but to humanity, we owe much. That is why we're here, and crypto is our rebellion." And I think on one hand, I definitely agree with that, right? I feel like a lot of people are sick with the status quo, whether you're living in a first world country such as America or any emerging economy such as, for example, Venezuela. A lot of people are sick of the status quo, the systems, the industries, the regulation that's been put in place. And I think people are fed up, Definitely people have gotten more fed up, probably due to just backbreaking inflation over the past year. Like, eggs and milk are a lot more expensive than what they used to be, and that definitely makes me mad. But Eric Voorhees made the point that we basically live like farm animals. Perhaps I wouldn't go so far to say that we all live like in a complete gutter. We live like farm animals. We're completely at the whim of like regulators and politicians, at least not within like the US or other slightly more developed countries. But I think that opening keynote he gave got me sufficiently energized again as to why I'm in crypto. Definitely for like the past few months, I've been like, oh my god, please just stop talking about like shared sequencers, roll-ups, like restaking. I don't really care anymore. But that Eric Voorhees speech really made me come back. There's definitely been like people on the other end of the spectrum that when I don't think crypto should be a complete rejection of democracy. You know, code isn't better than law. You know, there should still be systems in place. And I completely agree with that. Right? I think a lot of people in crypto sort of have these extreme views, and we always like to like put ourselves on the extreme ends of the spectrum. You know, it's either full centralization or full decentralization. I don't want any of this CDFI stuff, but I think there's always a middle ground for everything, to be honest. And I think for crypto, it's the fact of the matter that that middle ground between whatever institutions or environment or society structure we have today and crypto, that middle ground is still better than whatever the status quo is. And yeah, that's a brief takeaway of permissionless. We're so back.
I love to hear that the keynote got you fired up. You know, I hope that was part of the intent, and if not, that's certainly one of the goals it achieved, without a doubt. Eric Voorhees is the man. I got into crypto, really got into the weeds of crypto through Thorchain, and the Shapeshift has worked very closely with Thorchain over the past, so it's cool to kind of like see that arc in me knowing him to. As some dude who is involved in Thorchain, to now be giving a keynote at Permissionless. And of course, he's far more important than all of that. But it was just cool. Yeah, I liked the sentiment he was driving home of just like kind of trying to reinvigorate, drive passion into people about why space is important. But yeah, no, I think I agree largely with a lot of your takeaways too. Like the average conversation I had, I walked away being like, damn, like that was a great conversation. And it was like a lot less people asking about, I'm not trying to throw any shade here, but there's way fewer, what do you think about Cardanos, or what do you think about Stellars? And a lot more like, all right, do you actually think a single shard blockchain is the future compared to maybe like, Ethereum's approach or the Cosmos approach? Like it was like super in the weeds questions about like things we don't have answers to. And we're like actively trying to figure out, not just asking questions about the protocols that have the best marketing campaigns. So that was kind of like my TLDR.
Yeah, I gotta say, I also had a lot of conversations about like what's the best way to scale a blockchain. You know, I talked to people I think majority of the people I talked to are probably layer 2 maxis. Everyone's excited for what they think is this incoming layer 2 narrative. But I talked to many people who are like, what do you think about a monolithic chain with a localized fee market like Solana? And, plenty that we're talking about app-specific chains and such as Cosmos, or, plenty of other solutions as well. And it's really cool having those conversations because, even within our own team, we have lots of different opinions on what's the correct solution. And at the end of the day, they're all potentially viable ways to scale blockchains. And it's really cool seeing the space be in this, like, such niche times where everyone's kind of very interesting and looking at the things that I think are the most important to how we proceed and grow the space so that we can support billions of users in the future.
Yeah, I think that really leans into the fact that was kind of an overarching theme of just talking to people in the conference was maybe the Ethereum centric worldview, if you will, is just not as dominant anymore. And I feel like a lot of people came into crypto, got comfortable with Ethereum, and that's how they learned about like account-based blockchains or smart contracts as a whole. So it's kind of like your starting off point. And then we do tend to tribalize how we think about blockchains, and so you kind of become like an ETH maxi, and then it takes like a hurdle point to be like, okay, well, maybe this Cosmos ecosystem is cool, maybe this Solana ecosystem is cool, and now it's kind of ossifying into more of like ideological approaches. We talk a lot about on this podcast about how Ethereum's end goal is really not too dissimilar from the Cosmos ecosystem's end goal. It's just a very different way of getting there. And, we're kind of starting to see that. It's like, even Westy, who's been a long time just like ETH is the best solution. ETH is the best solution. Yes, there's other viable ways, but ETH is still the best solution. He even cracked and he was like, damn, like, I think there's like 3 really good ways of scaling a blockchain and like hitting critical mass. And, I think they'll all probably work over the long term. But the question is, how do you differentiate at that point? Or does being first really matter here? Because I tend to think, yes, like the first ecosystem to really bring on that game-changing application or that game-changing amount of users in any capacity will probably at least think they won. But it'll be tough to say if they actually won.
Man, I gotta say, one of the craziest conversations for me was late in the night. Me and you were chatting about Bitcoin. And, I've always been a big fan of Bitcoin. It's what got me into this space. And I think you've probably never been a fan of Bitcoin. And I walked away from the conversation being a little more bearish Bitcoin. And I remember the next day you were like, I actually, see some of your points about why maybe Bitcoin could be successful in the future. So it's pretty crazy that, there's so many topical things to chat about. And I got to say that one hit pretty hard.
Okay, hold on. I gotta set the record straight here. I was first a fan of Bitcoin, but yes, like I just see the fee model as an unsolved issue. That an increasing number of people are like, okay, like this is an issue we have to solve. Of course, there's like always the hardcore camp in any protocol or really any ideology period that's like, no, we have to never change. Like that's our core ethos. But yeah, I just think the fee model is broken and something needs to be done about it. And that's not to say something won't be done about it. But I think one of the points you mentioned was like, yeah, well, Ethereum hasn't solved scalability. And that's just like maybe take a step back. And I was like, shit, yeah, like we have an unsolved problem too, and over in smart contract land. And so that was like, okay, we're still actively solving things, but I will say like there just doesn't seem to be a light at the end of the tunnel for the Bitcoin fee model problem. Like I think this is the last bullish happening. I really do. And then it starts to become all eyes on how do we fix this problem, which is probably a good thing because we do need that problem solved.
It's interesting that there's this drive chain narrative forming. It's like super nascent and early stage, but it seems to actually be gaining a lot of support from the Bitcoin maxis, but even more than Bitcoin maxis, I would say from core contributors, like the ones who have the most influence on the protocol. Obviously, at the end of the day, no single entity has a ton of influence, but if you get the Bitcoin core team and a lot of the loud voices in the ecosystem support something, it at least has a chance at maybe being a future. And it seems that this drive chain idea is something that's maybe gaining a little bit of traction. I'm honestly not an expert on it, but it seems like a potential solution where you could have all these layer twos, like maybe one of them's even an EVM or a smart contract platform, and they drive a little bit of value back to the Bitcoin fee network in the same way that I guess side chains and layer twos do. And I think it's interesting. Also, like maybe in the future, people look at Bitcoin as money instead of digital gold like they do today, and that could drive some value to it. But you made a lot of good points as to, like, why would you ever bet on Bitcoin? Like people are going to use stable coins for that narrative. And I definitely walked out of that conversation feeling a little more bearish than I did before. Not that I'm bearish Bitcoin.
Yeah, it's just like pumping out $25 million of security incentives every single day to miners and not to token holders. So it's true to like, it's more than just dilution. It's a cost to the network. It's a tough one. It's a tough hill to climb. And even if you look at ordinals, which still have a large number of transaction volume, but just the fees aren't there anymore. There's much less demand to get them included in the next block. The peak of the ordinals hype generated in a single day, generated about 17 or so million dollars of transaction fees. And so like, okay, even in the peak of this, definitely this speculative bubble, yeah, $17.79 million of transaction fees in that specific day. May 8th, there was about $24 million of Bitcoin issuance. So it's still just like an enormous amount of money that is being pumped out of Bitcoin. I want to give a quick shout out to Hexens. As we explore today's blockchain landscape, let's take a moment to recognize them as a premier cybersecurity provider in Web3. Hexens is trusted by tier 1 projects like Polygon, including a security review on their new Polygon zkEVM, Mantle, RiskZero, Lido, 1inch, Nubank, and more. Get a deep dive into your technology stack with the most comprehensive analysis and cybersecurity consulting. Hexens not only uses widely known methodologies and flows, but discovers and introduces new ones on a day-to-day basis. With over $55 billion secured, they cover everything from smart contracts to blockchain to Web2 pen tests.
Yeah, there's been nearly $7 billion of total value hacked in crypto's nascent history, so it's safe to say your team has a lot on the line. Don't skimp out, take your security seriously, and reach out to Hexens. Don't forget to mention 0x Research for a free Web2 pen test with your partnership, and reach out to Hexens at hexens.io. Find them in the links in the show notes, or reach out to them at Permissionless. They'll be at booth 832. But without further ado, let's get back to today's episode. Roping this back into the conference, though, I mean, it was in Texas, and I think it was, I think it was Riot. I'm not sure. I could be wrong there, but they made like $32 million in a month just selling electricity back to the grid. And while we were there, they were like, hey, be careful of power outages. Apparently, there was like a water boil advisory, et cetera. So, I mean, there is one bull case for Bitcoin tying it into the real world. That might be a stretch, but nonetheless, I think the bigger topic here and takeaway from Permissionless is that no one was actually talking about Bitcoin. Like, this is just our own conversations, our own curiosity, but I didn't see a single side conversation happening trying to solve the Bitcoin fee problem. And I mean, I think that speaks volume on its own.
Good save, Matt. Matt and I were about to turn this entire podcast into Bitcoin versus smart contracts.
It's crazy because you're right. There wasn't a single conversation at the conference about Bitcoin. This was like, 5 beers deep at midnight between Dan and I, just arguing out like year-old arguments. At the conference, I saw a lot of conversations about Ethereum, about Cosmos, about Solana. And the one other thing that kept coming up is like, there's a lot of institutions there, people from, things like KPMG, EY, some of the banks, things of that nature. So like one takeaway was the institutions are here. Like, institutions aren't coming, they're here. Maybe their teams are only 5 or 10 or up to at most 50 people. So, they have a lot of room to grow, but they are here, they're interested. And they weren't even more than when I was having these conversations with people like this. Some of them were interested in, what they call public blockchains, which is something that I have an issue with because these are just blockchains. Like you shouldn't call them public blockchains. They're just blockchains. Anyways, they're also interested in like this idea of private infrastructure, creating new technology that particularly supports their stack and their business rather than using, Ethereum and things like that. So I thought that was something interesting. And, I had a lot of pushback against it, but it did keep coming up. So I thought it was worth mentioning.
Yeah, shout out Citigroup. Actually, today we saw that news of them doing a pilot program with a private blockchain, basically for 24/7 cross-border payments and financial primitives that anyone in their network can actually access. But I think this kind of ties back to the Voorhees speech that we started with, to be completely honest, because like, why would you not want companies innovating this way? Like, I get you hate the notion of a private blockchain, but like, I don't think anyone really knows the true use case for blockchains today. And like, yes, you can argue, like, I mean, we're arguing over whether Bitcoin's going to be around, in 20 years, considering the fee problem becomes such a big problem here pretty soon. So I think I'd rather have entities tackling this problem from every angle, even if it is in a walled garden environment, just so we can actually figure out like where we fit in the world and what the end state is. Like, I think there's so many applications for this stuff, and I'd rather have everyone working on it than just saying, nah, we want to completely leave out any type of notion of the ethos that doesn't fall with like the original ideals of crypto.
This was something that I asked during a panel I moderated. So the panel that I moderated was the evolution of centralized exchanges. And I asked all of my panelists, one from Gemini, one from Kraken, one from Coinbase, and one from OKX, what are institutions, right? Because I feel like us in crypto, we always like to say, oh, the institutions are coming. The institutions are coming. Whenever a spot BTC or ETH ETF gets approved, the institutions will come. But I don't think a lot of us have a single clue what institution really means. And to be honest, that was the same answer that I got at the panel, right? Institutions are so wide-ranging. It can include central banks. It can include sort of TradFi institutions such as like investment banks or just traditional banks. It can include Fortune 500 companies. And I think one interesting statistic that Greg from Coinbase pointed out was that they had like quite a lot of institutional demand from Fortune 500 companies. So not financial companies, just like standard big old like American companies, and they had a lot of interest from them in integrating like either custody or like being interested in crypto as a whole or blockchain, right? And you see that more and more over the past year, right? For example, like Visa integrating with like USDC on Solana and using Solana as a settlement layer. And also, for example, like Circle's wallet as a service, partnering with Grab. For those that don't know, Grab is one of the largest super apps in Southeast Asia. It's like Uber Eats, payments, and like 10 different other things all in one app. It's basically like the WeChat, but for Southeast Asia without the messaging functionalities. And that partnership was very bullish, right? There were like vouchers that you would be able to use from day one. You got NFTs. It wasn't another one of those like just partnerships that just had no purpose to it, other than for a brand name's sake. For example, like Microsoft and AI, like utility. Not gonna name names here, but it feels like we're definitely seeing a lot more institutional adoption, right? Especially in the DeFi space too. For example, LayerZero made a big announcement that they were going to integrate Google Cloud as the default oracle. So when I first heard the news that Google would be doing something with LayerZero, I wasn't very sure what it would be. My gut feeling was that it would be Google running the relayer, since that's kind of like the less demanding, perhaps from like a blockchain or like crypto economic security role perspective of between the Oracle and the relayer. But then Google Cloud is now the default Oracle for LayerZero, and they replaced Chainlink. To me, that was like really, really, really big news that wasn't talked about enough. First of all, because it's now the default Oracle, Chainlink got pushed out for Google Cloud to come in, and I feel like that should take a lot of people in crypto by shock, actually. Chainlink, it's like a decentralized Oracle network, whereas Google Cloud is very, very far from decentralized. It's just like a bunch of data servers, probably 100% controlled by Google. And LayerZero worked with Google in order to set up like all of the infrastructure they need in order to act as an Oracle. And truth be told, it was cool when I first heard it, but I'm not sure how I feel about it after thinking a bit about it. I asked the LayerZero guys, what's like the security model behind Google Cloud running the default Oracle? And their answer was, Google is a $1 trillion big tech company. They're not going to rug you. But then internally, I'm thinking, if Google Cloud rugs LayerZero, no asset manager even knows what LayerZero is. None of them are going to go out there and go, oh, I'm going to sell my Google holdings on my portfolio. That's just not going to happen. But also on one hand, it just seems like Google Cloud running the default Oracle is like social consensus on steroids, like big tech social consensus. And at that point, like, I'm not really sure what the point of like using an institution for the blockchain is. There's like a whole other argument here of like how like crypto's been trending towards like just moving stuff off chain, not bothering to do anything on chain, and sort of like just giving up on decentralization. But that's an entirely argument. So as far as like institutions as a whole, sorry for going slightly off topic, I definitely agree institutions are coming. There's a lot more that happens behind the scenes than we know, right? There's these consulting companies, there's these auditing companies, there's these finance companies who all do things behind the scenes. We just never hear about it, right? These guys aren't the guys that are spending like 3 hours of the day on Twitter posting about what they do. They just do stuff in the background, helping companies sort of form blockchain frameworks, helping incorporate NDs, helping incorporate crypto into the sort of like the daily operational or logistical needs. It just happens very, very, very behind the scenes. But I think we all got a taste of that during Permissionless, which is very good.
Yeah, a couple things on that, Ren. So backing up to the USDC part, yes, there was a USDC and Shopify integration. There was also the Beam and Visa integration leveraging USDC. There was also the Visa and Solana integration leveraging USDC. There's also the Circle and Coinbase deal, bringing kind of like pushing out USDC to the Cosmos ecosystem through Noble and more to more ETH L2s, including Base. Coinbase's L2, and quite honestly, most importantly, was the SAP integration. I know you mentioned Citibank as well earlier, and that was super interesting because they're kind of doing the same thing, right? Allowing their existing clients to use cross-chain payments through USDC. Like that is what institutional adoption looks like. Full stop. If people can use their existing service providers and send meaningful value transactions using USDC, and it's not going to be me and you most likely. Well, I think that's part of adoption, but what institutional adoption looks like is these Fortune 500 companies using this technology. So that's why I think it is insanely exciting to see banks like Citi and payment processors like Visa and big companies like SAP that are already integrated into a majority of these Fortune 500 companies really pushing this tech forward. On the LayerZero stuff, can you run us through what like the super high level, because obviously this could be an entire podcast, but like the relayer versus the Oracle, they use this bifurcated security model. Can you just like run us through that real quick? And I guess my ultimate question is here, like, does that mean that Google Cloud is running a full node for every LayerZero supported chain?
Yeah, so LayerZero is a cross-chain security marketplace, right? There's a bunch of different security providers, for example, Chainlink and now Google Cloud. And basically how it works is that there's two entities that facilitate this cross-chain general message passing or whatever you want to call it. The first is the oracle, and the second is the relayer. The oracle is in charge of retrieving block headers. More often than not, you have to run a full node, and the relayer is in charge of sort of fetching a transaction identifier proof and then providing that to the endpoint. Basically, the oracle feeds the block header to the endpoint. The the relayer feeds a transaction identifier proof, and the message. And sort of when these two things get sent to the endpoint and they match each other, then the message is unlocked, and whatever transaction that needs to be executed gets executed. And so I actually asked whether like how did Google set this up, right? And the answer I got was that LayerZero was very, very involved in helping Google set up like everything they need in order to run an oracle. I also asked someone, I can't remember who. So is Google running like a full node for every LayerZero supported chain, which I think as of today stands at around like 33 or 34? And I think the answer I got was no, which left me a little bit confused because to my understanding, you need to run a full node in order to pull the block header from a blockchain. And so I'm not really sure what's happening behind the scenes. And I think that's another thing that left me a bit concerned, right? LayerZero runs one of the default relayers for LayerZero. And now Google Cloud are running an Oracle service that was sort of built by LayerZero, or LayerZero definitely had like a very, very involved role in helping Google Cloud be able to achieve like whatever they need to do as an Oracle. And so the whole security model of LayerZero is that these two roles, the relayer and Oracle, are completely distinct from each other, right? Only if both of these collude with each other, then like you can do something malicious with LayerZero. But now it seems pretty tightly integrated, especially with the fact that this partnership has been 1 year or so in the making. But yeah, that's like a brief rundown through the LayerZero security model. They gave out great swag, so I'm probably not going to complain that much. But it just feels iffy, you know? Like I feel like we've been moving a lot of stuff off chain, whether that's like execution or like order matching or whatever, especially in the realm of DeFi. And this kind of feels like something similar. You know, it kind of feels like we're just giving up on decentralization a little bit. But it is also very cool that Google Cloud was willing to do quite frankly, like a huge partnership with a cross-chain bridge like LayerZero. You know, it's quite rare that you get such a significant partnership from a big tech company in crypto, and it definitely puts us on the radar.
I think I would trust Google as a company over like the 3 or 5 multi-sig that controls Chainlink. You know, maybe that's a hot take, but at the end of the day, I don't think Google's probably
hey, 4 of 9. 4 of 9.
4 of 9. Sorry, that might be worse actually. No, it's better. And also it's crazy how into crypto Google has gotten. Their GCP has become Google's become a competitor to Alchemy in, you know, providing like archival node data to those that need it for Ethereum. So I think they're pretty sophisticated at this point. I'm sure, you know, at the end of the day, they're still getting into it. I'm sure LayerZero helped them set it up, but I wouldn't worry too much about, you know, Google being controlled by LayerZero in their Oracle endeavors. I think they're, you know, for lack of better, I think they're full steam ahead into crypto and really trying to, you know, be in the space. And it's really, really cool to see. And, you know, I guess that is an example of an institution in crypto. At the end of the day, I think these types of partnerships are way cooler than the institutions that everyone else wants to come into crypto, which would be, you know, the endowments and the people that are quote unquote coming to buy our bags. I would actually rather see this. I'd rather see like infrastructure that would help, you know, this space become more efficient and better. And I think that's, you know, what's happening. But yeah, that's just my take.
I think it's worth mentioning too that it's just the default Oracle provider. So you can still configure the Oracle of your choice if you'd like. You could do 3 if you want and then take a median. So that way if either one of them goes down, like I think really the big take home like thing to get out of this is just like Google Cloud is partnering with a Web3 company and they're putting their reputation on the line in the process of it. So I agree with Matt. I think that's pretty huge.
Yeah, I like this breakdown of like what is an institution, right? It's like you almost have like financial institutions, and then I don't know if the right word here is like consumer institutions, but it might honestly just be non-financial institutions. But the financial institutions are definitely coming as well. I think the ETFs make this super, super easy. I had a panel with John Wu from Ava Labs, Stan Lowe from QCP Capital, and Matt Hogan from Bitwise. And that's obviously something we talked greatly about was what does the ETF coming actually mean? And what it really means is lower barriers to entry for family offices, RAs, capital allocators to get into this space, right? For those people, it's pretty hard to get a Coinbase account or a Coinbase custody account or a Coinbase Pro, whatever it may be that they need. It's not just downloading the app and opening it. It's getting it past compliance. It's getting comfortable with, you're getting your clients comfortable with you using this new software service to hold their value in. It's a much, much more than, the download from the app store and submitting your KYC. It's a process, and internal compliance is a total bitch to hurdle. So what these ETFs do is put the ability to allocate into the space directly on the Bloomberg terminal or whatever allocation software that they're already using, right? So the inflows are expected to be great because the demand is increasingly great. And anyone who's listened to a lot of 0x research knows we're a big fan of Bitwise and Matt Hogan and Ryan Rasmussen as well. And they've come on the show a few times, and every time we ask them, where is the institutional mindset, financial institutional mindset with crypto? Because it feels like, a year, even just a year and a half ago, it was like, all right, 1% of the portfolio and we'll put it in Bitcoin. Then maybe like 6 months ago, it was like, okay, this Ethereum thing, it sounds pretty interesting. Still 1% of the portfolio, but we're going to cut a sliver off of that and put it into ETH. And then now it's like, all right, well, internally within the industry, we're always talking about how, ETH is staked ETH is this like cash flow generating asset. Is super attractive, especially with Ethereum. It's not just, earning new ETH on your ETH deposits and kind of that inflationary reward mechanism. You're actually getting this real yield concept through MEV, through MEV Boost, and priority fees through transaction volume. So you're like actually earning yield on your asset, and that's like this super attractive thing. We always talk about it, and every time I ask Matt Hogan, I'm like, "Where are we on the staked ETH? Are they interested yet?" And they go, "Look, it's still 1% of the portfolio. If that's your allocation approach, you either want to make it double it and make it 2%, or be okay with it going to 0%. Earning another 3 to 5% on that allocation is just totally uninteresting." Which I always think is a really interesting thing. So we're not quite there. That's kind of where we are in the risk curve. So while all of us go out and buy these DeFi tokens, that's where the financial institutions are sitting. And I always think that's a good sentiment check.
Yeah, definitely. I agree with that. Another interesting, I guess, conversation throughout the conference that just came up constantly was shared sequencing, especially given the Espresso partnership with Arbitrum. And I actually had the privilege of speaking with Stephen Goldfeder, the founder of Arbitrum, and he was just talking about how wrong people have this debate in general. He's like, everyone thinks it's about decentralization, but really like it comes down to MEV as well. It's like, do you want to create batch auctions and basically internalize this MEV, or are you trying to just do FIFO and mitigate the MEV altogether to improve the user experience? And he was saying like, yes, decentralization is part of this, but then when you decentralize the sequencer, you likely create more centralized parts in the system. So, it's not like, all right, decentralize the sequencer, we can stop here, we're all good now, we won. So there was just a lot of interesting takes on the sequencing space, but I do think the Espresso partnerships that we've seen over the past, couple months are pretty huge, because I feel like a shared sequencer network doesn't actually work unless all the L2s opt in to create kind of those network effects and value accrual just for the entire ecosystem. So now it's starting to become not, are you doing an Espresso testnet deployment? It's more like, oh, you're not doing an Espresso testnet deployment. So I found that super interesting as well.
One of the most interesting conversations I had was with Steven and Pat. Pat works at the Arbitrum Foundation, and Steven of the Offchain Labs, about what is MEV. So like at the end of the day, like, okay, we can all probably agree that sandwich attacks are have victims, right? So like maybe malicious or bad for the network or for the user experience, maybe more so than the network, because that would be debatable. But what about backrunning? What about, just taking a swap and after it goes through, arbitraging it versus another domain, versus Binance or a different exchange or whatever? It's like, Well, those are very different things. Like backgrounding is probably not bad for the user. Whereas, of course, like a sandwich attack that makes the user's execution price worse is probably bad for the user. And then we have like all these new types of things people call MEV too. Like if you look at friend tech, there's all these smart contract bots out there. They're sniping newly created accounts. So not paying for ordering, which is what traditional MEV does, but we're still calling it MEV. I think it's like we need better definitions of MEV before we can build solutions for sequencers that address what DAOs actually want. Because one of the panels I hosted was on like the problems in DAOs today, and it's like a lot of the delegates, token holders, the people who are making decisions about, for instance, Arbitrum, like what should the sequencer look like in the future, they don't actually know. They just know the word MEV, and they don't actually know the nitty gritty granular differences between these different types of MEV and how you could design a sequencer that only allowed for some types of MEV, but maybe not others. So like really, we need better education around this subject, and it needs to get into the hands of token holders and delegates yesterday, in my opinion.
I want to agree with you, but also I think crypto researchers have collectively spent probably 1 million man hours just endlessly debating definitions on Twitter. But no, I think before you tackle a problem, you always need to define what it is. And like MEV, especially from like a rollouts perspective, is probably something that we need to figure out, and not a lot of people have a good idea on. I think another thing that I think about when it comes to shared sequencers is value accrual, right? Today, the value accrual for Base, Arbitrum, Optimism are all very clear. Like the sequencer collects like fees on the L2, and then it pays the L1 data costs, and you take the difference between those two, and it's just pure profit to a sequencer, right? With a shared sequencer, that looks very, very different, because to my knowledge, I don't think you can send a transaction both to like a shared sequencer and sort of like the native sequencer of that rollup. And so if all transaction order flow goes to a shared sequencer, right? And if Espresso's plan is to use like restake ETH of EigenLayer as sort of like the token that secures or validates the shared sequencer, then what happens to the value accrual of Optimism, Arbitrum, the tokens itself? I don't think I've had a lot of like, I haven't heard a lot of like very clear thoughts from people, and I think that has the potential to change like a lot of things, both from an investment perspective, but also from like a, I don't know, like ecosystem alignment or like security perspective.
This is a super interesting question, and I don't have a good answer to what happens when you plug into a shared sequencer network, but I think this question is going to become increasingly prominent for L2s as they continue to battle for users, because they could see a world where the spread that L2s capture on the amount, like basically the profit, right? So revenue being the amount of transaction fees paid by users on the L2, cost being the amount to post the data back to the L1, the profit being the difference. Why you could see an L2 that's like, no, we're super Ethereum aligned. Like we don't want to capture profit. We want to be a public good. So anything, like there's no surplus we're going to capture, and we're going to create a fee algorithm that is designed to always generate $0 of profit and only charge the users what it costs to post back to L1. And in that sense, it's like, all right, well, then there's no value accrual here. And there are some pretty Ethereum aligned L2s that might be their end state of what they're at least thinking about building.
So it actually wouldn't change, like the current profitability or model you could build for an L2's fundamental value accrual doesn't change with shared sequencers, because the way it's built today is there's congestion fees, which are, at least for Arbitrum, Arbitrum's the only one that this is true for, but it's driven to DAO controlled, or DAO treasury, DAO controlled address. And you have another fee that goes to the sequencer that pays them back for their cost. So this doesn't change, but what gets interesting is like, where does the MEV go? How do you make sure the sequencer returns the MEV back to the treasury if that's the goal, which I would imagine it is, at least for Arbitrum. So yeah, that is an interesting point. And then like Dan said, like last time I checked out Ava, which is a roll up built with the OP stack, the Ribbon Finance team built it. They actually were doing exactly what you said. So there's no fees for transacting, and they were just pocketing the fees for trading. So the sequencer was constantly taking a loss, but it was made up for in trading fees. And you could even see a world in the future where you had subsidized trading. Like if you make sure that, if you do some sort of silo resistance and make sure that those transacting are actually real, and you've created this token that has a lot of value, you could even subsidize getting users onto your platform. I think this is actually, it sounds kind of crazy, but I would not be surprised to see this. It's not my base case, but I wouldn't be surprised at all to see this, because, we will probably have 20 L2s at least by the end of this year. Actually, we already have 20 L2s. We could have 100 L2s by the end of this year, and we could have 100 L2s with tokens. So it's like, how are they going to get builders? How are they going to get users? We're going to see this knife fight between L2, BD, grants programs, and DAOs, where they just are doing anything to incentivize developers to get there, and users as well. So I think that's a really cool future to think about.
Yeah, on the topic of open-ended questions, and just as Matt was pointing out, like we haven't really defined MEV properly, at least from a roll-up perspective. Like what happens if there's a sequence of transactions that the shared sequencers, that the shared sequencer views as optimal for the shared sequencer, right? But if it sends that sequence of transactions to, for example, one of the individual roll-ups, that sequence of transactions is not optimal for the roll-up, and it could be reordered some other way to make it the most optimal for the roll-up. Whatever your definition of optimal is, whether that's like maximize MEV, maximize value accrual, maximize utility for users or something. And yeah, there's just like a lot of open-ended questions that I don't think a lot of people have a good clue to yet, and will definitely get answered along the way as Espresso or other like shared sequencer projects continue to work on it.
Yeah, you always have the potential model where, in order to participate in the sequencer network, you have to put up a stake and then you build slashing. But I've always had the idea that we're just, I don't know. I think we can do better. I don't think this sounds to me like an optimal way of ordering transactions on an L2, but I also don't have a great solution. So, I can't really be a huge critic.
I think that's largely because the L2s are they're a bit siloed, right? Like even the OP stack, you don't have interoperability, and that's sort of like this unsolved problem that shared sequencers are maybe a step in the direction of. Like obviously you don't get the same bridging guarantees by any stretch of the margin, but you do get some cross-domain benefits that gives them a little bit more of a connected ecosystem, right? And so we're even starting to see, I think maybe not in the next 3 months before the year end, but 2024 is going to be interesting. Like, do these zk ecosystems with richer bridging guarantees actually start to kind of hit some sort of a critical mass and gain traction at all? And just actually today on Monday the 18th, we saw the announcement that Canto is actually going to move from a Cosmos-based app chain to an Ethereum L2 on the Polygon CDK. So that is like their ZK stack type solution. It's going to be interesting. Like, I'm just excited to see this real-time richer bridging, if you will, in production. So I don't know what the ETA is on them actually getting that built into production, but it gets pretty interesting on that point. That's really kind of the universe that I'm looking towards, is where we get these constellations of ZK ecosystems that actually have better interoperability guarantees.
Am I allowed to change topics here?
Fire away.
All right, I'm gonna make a point. I think another recurring theme about the conferences, or about permissionless, or just in general over the past 2 weeks, has been about data. I think we've gotten to the point where we've all agreed, like blockchains are these open permissionless ledger. You can see all of the, or like technically you could view all of the data that you want about every single transaction, about the state in any moment of time or at any blocking time of the blockchain. But like none of that is readable, like normal users not able to read Etherscan. Most people don't have like SQL knowledge in order to form a query on chain. And I think both from like a usability perspective, a lot has been focused on like wallets, account abstraction, the user experience. But I think it's also coming to a point where a similar notion is happening for research and data, right? So obviously I'm going to self-show a little bit here that Blockworks just released their analytics product last Wednesday. You get trusted, verified source of transparency and data for all of the L1 and L2s and dApps, and we'll be having that by the end of Q4. There's a fantastic mix of very TradFi native metrics such as cash flows, but you also get very crypto native metrics such as ETH supply flows, staking rates, user activity, what are the top gas guzzling contracts. And I think sort of that's one thing about crypto, right? You have these like open permissionless platforms you can build anything on, but also at the same time, there's sort of like a brand name alignment that people have to eventually work towards, right? And that's not just like for our research product, right? Sure, like we have a fantastic research team and we use sort of like data that anyone can technically access, but there's also sort of like a verified component to it. And it's a similar thing for whether like you're a roll up or a protocol building on sort of like a modular stack, right? Eventually you would want to sort of lean towards a verified company or sort of a company with a better brand name. And I think that sort of brand building component, even if like everything is kind of the same in the future, like say we get the same like roll up stack frameworks, is something that's gonna increasingly come to the front of mind over the next 1, 2, 3 years.
That was beautiful, Ren. Yeah, but transparency is my favorite quality of blockchains, to be completely honest. It's the fact that we can see what's going on. But to your point, it's not always easy to abstract that the complexities away and just like give me the data in a line chart sometimes. And so that's what this product does, is we're building out the interpretation layer, making it easy to access health and profitability metrics for our covered asset list. So we started with the approach of launching the infrastructure layer first. So we're supporting all of our L1s and L2s. So, you know, everything from Bitcoin, Ethereum, Solana, Arbitrum, Base, Optimism. And then we're going to build out support for the DApp layer. So I think first on the docket, I don't want to speak too soon, but it's looking like it's going to be Uniswap and Lido, and then we're going to kind of build out going down there. So again, as Ren mentioned, we really want to take the approach of kind of threading the needle between what traditional finance is and has built out, and understanding that, you know, they've done a lot of phenomenal work in how to value things and what cash flows are and why that's relevant. But there's also, we're building it greatly in a new paradigm, and there's things that don't exist before. The notion of just like spinning up a digital economy has never existed before, and we're going to need some of our own metrics. And so that's kind of the direction we're thinking. Yeah, and again, just trying to thread the needle between TradFi and crypto native. So a lot of great stuff on there. I think we'll probably do a live demo on this YouTube channel at some point in the near future, but definitely go to the website, check it out. I'll put the link in the description, but it's app.blockworksresearch.com/data.
Yeah, I remember like a month before we launched this, so about this time last month, Dan, you dropped in, you know, the product, and you're like, hey, try and like break this, try and figure out what information's wrong. So I have every single, you know, data provider in crypto pulled up. So naturally, there's discrepancies between our data and everyone else's data, like pretty much across every metric. And I'm like, Dan, you got to check this. Westy, you got to check this. And like, you guys were like, I'm 100% sure that we are correct here. And just hearing your guys' confidence there was like pretty sweet, just to know that like we have all the right information. But yeah, definitely check that out. But some other takeaways I had from Permissionless, I feel like Cosmos has a ton of stuff going for it. I feel like we've talked about it a lot, but got to know Ethan Buckman and Sam Hart a bit because I got to moderate a panel with them, and now I can officially call them my friends, which is pretty cool. But nonetheless, very good guys, big brains, like seriously just like hyped up about the vision. And I asked them about, you know, MetaMask Snaps, which was also announced to Permissionless, which basically lets people, honestly, it kind of turns MetaMask into more of like a modular product, because now like different teams can build different plugins for people to integrate. And now, you know, you can use Cosmos chains with MetaMask, which in my opinion is huge for the Cosmos ecosystem, because having to download another wallet, you know, going centralized exchange to Osmosis and then to like wherever else you want to go, or yeah, just the flow has been terrible. Then you got the native USDC. So yeah, I think the app specific chain thesis is definitely gaining steam, especially with DYDX v4 mainnet here pretty soon. I also hosted a panel on gaming. That was with Argus, Brevin Howard, and Animoca. So kind of a wide array of speakers on that one. But I feel like everyone just really wants gaming to be where you want it to be. Like, you know, it's got so much potential in crypto, but I think everyone also like isn't really sure when that moment is actually going to come. And it was funny.
Guilty as charged. Absolutely guilty.
Yeah, no, it was funny though, talking to Scott from Argus, because he's like an on-chain maxi. He's like, yeah, everything should be on-chain. You know, he's the creator of the Dark Forest. And then you had the investors going, whoa, like, I think we got to take some of this stuff off chain, because like these games just suck. So two completely different perspectives. And then I would also say just bullish Solana builders. I met the Drift team. They just launched V2. Zano and Lucas, two really good guys over at Jito. They're at like 2 million liquid Jito Sol staked. So I don't know, bullish on like a lot of different ecosystems. And I feel like I went into this conference feeling so confident in like my ideals and like predictions, I guess, over the next 5 years. And I'm really leaving it more confused than I entered it.
I got a question for you on the gaming thing. So on-chain versus off-chain, what's your personal take on how much of the game needs to be on-chain?
I'm in the investor camp. I think that like the NFTs, the assets themselves should be, you know, on-chain. And then I think that we should have a lot of stuff off-chain. Like I think it'd be pretty cool if even you had like a game on the App Store and let's say there's tokens involved in the on-chain economy. Like the hardcore users can go use the on-chain game, but then the casual players can, you know, spend their 99 cents to buy this thing. And then that buy pressure ultimately flows on chain and the user doesn't actually even know it. And I think like you get around a lot of the different NFT token gateways of the app stores of the world. So I don't know. This is a space too where I'm really excited about, but I have no idea what the end game looks like.
I think I'm in the investor camp to your point as well, Sam, but I also agree with Matt. Like I haven't spent enough time to like really know if that's the best answer. It's just like in my head, I have the concept of just give me RuneScape with the economy of the game on chain. That is all I want. That would give you a very interesting dynamic of like, you know, you try to make, and you could even do this in like a permissioned blockchain sense. And I think it would still be interesting, right? Because so EVE Online, Ren, you pointed this out to me, and like they have this vibrant economy, but they don't actually have any of the in-game assets directly swappable for like dollars, which I find very interesting. And they have this super cool proxy where the dollars in the game, I think they're called ISK. ISK is redeemable for the subscription to play the game, like on a monthly basis. And so they can change the value of the subscription, sort of like think of it as like a Fed funds lever, right? Like you can, based on how cheap or expensive this subscription is like changes the inflow of capital into the economy, which is so interesting. And like you could find all of these crazy ways to maybe, I don't want to use the word manipulate, but like change or change the dynamics of an in-game economy. And I just think that'd be incredibly fun to play and experiment with in real time. And like I love kind of like the MMORPG style games as well. So I just think that'd be fun. But then you got to think about who's going to build this. Like, are you really going to bet on a crypto native firm that like loves crypto and has maybe built like a DEX or something within crypto, and so it'd be perfect to go build the in-game economy for this? Or are you going to bet on the team that has spent 20 years building out this exact game, but without the crypto element? And like I really just feel like it's easier to go kind of backwards and pick up the crypto element than be crypto native and pick up the how to build a fun and exciting game element. So it's like not only does that make sense for the fun side of things, but like actually creating like a virtual economy, that is not an easy task. And like EVE Online has actual economists on their team. So I don't know. A16Z funded the company that built EVE Online to kind of experiment with blockchains. So definitely going to be paying attention to what they're doing.
Two other takeaways from that gaming panel too was it was a side panel. So like I thought it was going to be pretty empty, to be quite frank, and it was packed. So like people are interested in gaming. There's no doubt about it. And yeah, I feel very strongly about that. And then the other one was, I was like, so like, I feel like in 2020, everyone was like, oh yeah, imagine you can take your Call of Duty gun over to Fortnite. And like, yeah, like that was like the envision of like Web3 gaming, like super composable. And I asked them if they're bullish composability and interoperability. And they're like, honestly, kind of bearish composability, but pretty bullish interoperability, like the ability to just cash out of one economy, very seamlessly go to another game and play in that economy. And that actually made a ton of sense to me. That one hit home for me.
I'll add that as an avid gamer, or used to be an avid gamer, I'm not sure I have the time for that these days. But as an avid gamer, I'm definitely excited about on-chain games. But one area that I'm also super excited about is gamified things, right? Whether that's gamified learning, gamified work, or gamified, I don't know. I feel like I've said learning already. But just like putting gamified stuff on the blockchain where, you know, you have like token incentives, and you directly get streamed like I don't know, like US dollars for working. That feels like a very natural evolution of taking sort of like the best of big tech or like startup type apps and sort of like the retention that they have and putting it on blockchain, especially as the economy moves into a slightly more like freelance model. It seems like you're seeing more people do like more things on the side, right? Whether that's like writing, drawing, doing a cartoon, ghostwriting, and especially as sort of emerging economies come online and they have like an entire plethora of like talents that graduated from good universities, are super smart, very talented. It's just that they don't have many job opportunities available domestically. It seems like crypto, at least from like a financial payment rails perspective, has the opportunity to sort of equalize that and make those opportunities more accessible. Or for example, say you're like an AI company, your prompts suck today, you want to improve the results of your responses, right? You don't want to have to go build out like your own platform. You don't have to go find your own customer base. So maybe someone creates like a decentralized human resource marketplace where anyone can come on, help train your models. You can stream them USDC for every like prompt that they did well, and you can add like some token incentives or like whatever and gamify it. That seems like a very natural use case of crypto, and I feel like I want to see a lot more of that happening too.
Yeah, I'm definitely for gamified experiences as well, Ren. I couldn't agree more there. But I did want to ask one last question before we wrap up, because there was a really good panel with Monad and Eclipse. Blanking on the third party on this one, to be completely honest. But I feel like just the SVM has kind of been a big talking point. Anatoly had that one talk on stage where it got really heated with some of the other panelists and why the single shard thesis is the right way to scale blockchain. So I'm curious, how do you guys feel about the SVM on Ethereum as a roll up with Eclipse? I believe that that news should be coming out soon this week.
Yeah, I'm super excited about that. Like that creation, right? And so what I actually I had a panel on the modular stack with John Adler, C-Node, and Neil from Eclipse as well. He was there, and I asked him, I was like, okay, look, like plugging an SVM based rollup into Ethereum, which is EVM based, got to be some complexities there. Like, I don't know, I can't tell you why I'm from a developer level, but in my head, that's just like I don't know, taking two ends of an electrical cord and trying to plug them in together when like that just doesn't work. And he was like, no, it's not. And I was sitting next to John Adler on stage when I asked this question, and John was like, yeah, actually, I can think of a few reasons why it would actually be easier. And I was like, all right, now I'm very confident that you're not lying to me, and this is actually is true. So getting the localized fee markets and the parallelization of the SVM and plugging that into Ethereum's liquidity hub as a settlement layer, what else do you want? I mean, that's kind of like the best of all worlds that we have right now. And then, like, you can even expand that out into the future and say, all right, use ETH as a settlement. So put my bridge contract there. Give me the liquidity based that it currently has. And I can tap into some of the liquidity, maybe even in those L2 ecosystems. And then give me the cheap DA from Celestia. And then I'm going to use the SVM. That kind of seems like this dream world of what we have as from an infrastructure level today. So very excited about what Eclipse is doing. It seems like they've kind of bailed on the roll-up as a service thing. Neil's been like very open about they just don't see the economics behind that. And like, I don't know, I haven't really dove too deep on that, but like in my world, I'm relatively bearish on the idea of like 100 roll-ups, 1,000 roll-ups, 1,000,000 roll-ups. Like, that's like a roll-up per user at this point. Like, I think a couple of roll-ups is probably the most logical starting point for me, and like that's where I'm at right now. So I love to see the SVM.
All right, so I'm pushing back on all comments here. Yes, having localized fee markets on an L2 is cool, but in my opinion, it's somewhat worthless because you can have application-specific rollups. You're not really fighting congestion on your rollup anyways. If you launch something really cool on Arbitrum, go spin it up into an L3. If you launch something really cool on Optimism, go spin up your own L2 on the OP stacks if it gets enough use that it's really like competing for block space. And as far as so like that's why I think like localized fee markets on L2 is like cool, but kind of worthless. And then as far as like the SVM, I guess okay, cool, we're gonna get Rust developers over here, but like as we've seen with Arbitrum and Arbitrum Stylus, they're going to support a full WASM compiler in the future if the DAO approves it. So I think that's actually way cooler. Like a WASM compiler, you can do Rust, C, C++, so not just Rust. So I think ZK Sync is doing something very similar with their own custom compiler. They actually don't even use the EVM. They're going to have their own virtual machine. Likewise, they'll be able to compile multiple different languages down into, I think eventually probably into EVM bytecode or Ethereum bytecode. So realistically, like, not a ton of value in this. We're going to onboard all the Rust developers, which I already kind of, have a problem with at the end of the day. Like, if you're an amazing Rust developer, you can probably go learn Solidity. There's other benefits, like, for instance, with the WASM compiler, you're able to come and put in custom precompiles. So like easy to come port some like super complex elliptic curve into your application that, rewriting in Solidity would just be close to impossible because it'd be too expensive. So like that's fucking awesome. But everything else is like, I don't know. I just don't see it as anything but cool. I do think it's cool. I just don't see it as like super valuable for the rollups. And then also if you're using Celestia as your data availability layer, like, you're not scaling Ethereum. You're not really gaining Ethereum security. So I don't know.
Okay. I agree. But I think my biggest pushback will be on point one, right? Because I'm still sitting in the camp where atomic composability is this thing that like we haven't really figured out the true value of today. And so I'm not ready to give it up, honestly. I want apps to be fully composable with each other, especially in a financial sense. And again, like, I'm not going to sit here and tell you I have the silver bullet as to why, but that really feels like a major unlock of blockchains, that settling for async composability, even if it's just like one block delayed, it just doesn't seem like the best move. Like, I really feel like there's a huge unlock there. We just haven't figured it out yet. So I'm not ready to settle to say, all right, just move them to its own app chain L3. But I hear you there. And I do think localized fee markets are still interesting because, at times of peak congestion, we've seen like Arbitrum fees still get like, increase materially. Localized fee markets are elite. There's no way around it.
But do you really still have synchronous composability with localized fee markets? Like, correct me if I'm wrong, but if two things touch the same state, I don't think they can be composable. Like, I don't think you can't be composable in the traditional sense and be in separate fee markets. And I might be wrong here. I'm not like, the most well read on Solana, but I think that if you're like, touching DeFi, which I think most people want to be able to touch the same state. So if you're touching Aave and Uniswap, so you're being composable between the two, you probably can't have these transactions be in separate fee markets.
I don't want to pretend like I know the specifics here either, because my thought is like basically it wouldn't necessarily be the token contracts that are like the piece of state being altered, and it's more so the liquidity pools themselves, right? So like each pool would be a different piece of state, but we definitely need to get a parallelization genius gigabrain on here and be like, I want to know on a like protocol level, like, let's pretend Uniswap was on the SVM. Like, what does that mean for Uniswap? That would be such a fun conversation.
That's a great idea for a podcast, honestly. We should definitely do that. Honestly, though, my biggest takeaway here is that Solana is the winner. Like, let's say Eclipse launches and
one single shard.
Like, they're the winner here, though, out of this situation. Because let's say Eclipse launches, a ton of liquidity migrates up there, and then you get a bunch of builders who are like, oh, now I want to learn SVM coding. Like, and then, you're going to have deployments both on this rollup and on Solana, because why not? You might as well deploy both places, and then you'd be able to see the benefits of having a layer 1 versus a rollup as an SVM. So I don't know. I put the real winner as Solana for sure, and I know Anatoly says that as well.
I'll say that block space is abundant, but liquidity and network effects aren't. And I think that's become very, very evident in the past few months, especially as rollup after rollup launches, but also as app chain after app chain tells the press that, they're Ethereum aligned. They're totally not like a Cosmos project. I do think Solana has been winning in the grand scheme of things in the past a few months, whether that's sort of like the real integrations it has, or for example, like Drip is doing really well. They have like a decent amount of like DeFi projects launching on Solana these days, especially like Zeta, Drift. It all seems like they're doing very interesting things. I think there's one project, I can't remember the name, but they launched like 0-day futures. I hope it's a Solana project, but like that was really cute, really cool. But also another point that I keep on coming back to is like a lot of these metrics don't matter today, right? Like even your favorite like blockchain protocol or like your favorite network probably has like what 5,000 daily active users, and all it takes is one consumer app to come online to blow every single user metric out of the water. Like, I wouldn't be very surprised if Near and that Cosmos app has more daily active users than every single blockchain combined together in existence, just because it's sort of like a retail shopping app. It's found, I think, product market fit, and it's generated near like, I don't know, like what 3.6 million like transactions for the day. I haven't verified that data myself, but I would guess it blows everything out of the water right now. And it's like, you know, like you can discuss all you want, like whatever is better tech, but then like Near, which I'm pretty sure everyone had written off, suddenly comes along with like one consumer app and it just like shits on all of your metrics. So
I think cute was the right word. At the end of the day, a lot of the applications we have today are cute, and they're not, you know, we're so early stage. Like one thing can come and just blow up all these cute applications, improve like, you know, this infrastructure. Really, we built the infrastructure. Now we need an app that gains traction among users. I think we are at a point. That was another topic of conversation. I'm sorry. I know that you guys are probably trying to wrap up, but account abstraction and other ways to abstract away tough user experiences and make you know, the general public, make it easier for the general public to use blockchains was another thing that kept coming up. And I think like we are seeing such significant evolutions there, and you know, it's really cool that I think in the next bull market, like it might be as simple as, you know, set up a wallet, you never see a private key, use your Face ID to sign off on a transaction, and like you never even know you're using a blockchain. Like you have account abstraction and someone's covering your gas costs because it's 3 cents on base anyways, or wherever you're transacting. And that was just like one last thing I want to mention.
Definitely bullish on abstracting away the fact that you're using a blockchain. Matt, you sent me that Goldfinch thing, and credit to you. You flagged this thing like 4 months ago, and I was like, I'm not looking at that. And then you pulled it up at Permissionless, and you were like, dude, just click the link and do it. And this Goldfinch app, like you click like 3 links, so you scan your face and boom, like you just signed a transaction. You never knew you had a private key. You never knew that your address was some long hexadecimal address. You don't even know what a blockchain needs. Like you don't need to know what a blockchain is or know you're using it. It was fucking cool. I was like, all right, that was actually felt like a mass adoption moment. I was like, I can tell my mom to use this and it would work. Like that's cool. So I definitely agree. Abstracting away blockchains in beyond the sense of just like traditional account abstraction is really cool.
Yeah, I had a Web3 Wallet Wars panel, and like that was obviously a very common topic of conversation was account abstraction. But I did find it interesting when I asked them, so what's the long-term business model here for wallets? Not a single one of them could say like how we're going to monetize the user base. I think like everyone just thinks this is a winner takes all market. Like we got to get in there, outcompete MetaMask, make a better wallet, get the users, and then we'll figure it out later, which I just find hilarious.
Can't say sell your order flow on stage.
Sell your order flow, and then didn't MetaMask print like $1 billion from their swap product over the last year or something? Like at least a couple $100 million, which is just absurd. Plus, like also, like I didn't say this, but they're gonna launch a token for sure, right? Like I think we can all assume they're gonna launch a token.
Yeah, I led into the question that way. I was like, so I doubt users will get railed on 1% fees forever, like in-app swap. So like, what's the next step here? And yeah, I think you guys are right. Payment for order flow. Anyways, that's probably a good spot to call it. Definitely let us know in the comments how you like the new structure with the analyst segment and then the interview. We feel like there's 2 cohorts of listening here. So yeah, just drop it in the comments. But guys, thanks for coming on the pod, and we'll see you here next week.
Yeah, appreciate it, guys. And Matt Cutler episode next week should be a good one.